Hello, viewers. Now, in continuation of the lessons for any fraud examination, uh, yeah, we move on to the next topic, that is asset misappropriations. So first we have learned what is fraud and all that one, and so now we move on to asset misappropriation. See, in asset misappropriation, there are three types again. One is cash receipts, another is fraudulent disbursements, and theft of non-cash assets. Okay, so this is a beginning of understanding the ways in which the frauds are perpetrated, and this normally happens at a lower level. Okay, at the clinical level, at a cash points, at sales points, receivables collection. These At these levels of the organization, the people, the employees may commit these type of frauds. Now, first today we briefly deal with in the asset, under asset misappropriation, cash receipts. See, you know what is a cash receipt? There are two types of likely frauds that are called. One is skimming and another is called larceny. See, the skimming means where the person perpetrates a fraud, okay, before entering the transaction in the books of account. That means before a particular transaction where he has misappropriated the cash, enters the books. When he does a fraud of stealing that money, that is called skimming. And larceny of cash, that means it occurs after the transaction has entered into the books, because the person can manipulate cash. And here, whenever we say cash, it includes cash, physical cash, checks, and other related documents, which are all uncashable. And so, but it is commonly called as cash. So, like that. So, skimming is when the person perpetrates a fraud before entering into the books. Larceny means the perpetration of a fraud after it enters into the books. So that is a fundamental thing that we must keep in mind. Now, the thing is, let us briefly go through what is skimming. Now we understood what is skimming is. That is, it's a perpetration of a fraud before the transaction enters into the books. So the thing is, there it leaves no direct trial as no transactions are passed. Okay, and normally these happen at the tellers, salespeople, wait persons, or people working in remote areas where they handle cash and all that one. So since there's a time, maybe a time lapse between the collection of cash and entry and all that one, or even if there is no lapse also, these people are normally commit these frauds of taking the monies or checks or cash or whatever, and not entering the books and making use of it by misappropriating. So they receive the cash in most of the cases directly. That's why they will be able to do this skimming of cash. So this misappropriated cash is replaced with other receipts, etc. subsequently. That's another thing. So, and then skimming as transactions do not appear in the books. It is very difficult to detect this, because since if you enter into the books, at least there is some scope of detecting it early. But when a transaction doesn't enter in the books, then the question of detecting it is very difficult. Okay, that's one point we should keep in mind when talking about this skimming of cash. And there are several ways depending upon the transaction through which the particular employee is misappropriating the cash through the skimming method. Okay, Then see, it all happens as I told you. For the respect of sales, cash sales, retail sales, distant sales, and the receivables collections, and these things. Where in the case of receivables and all this one, they follow this thing as robbing Peter to pay Paul. That means first he takes money from A, but he won't show it in the books. When he collects from B, he shows it as paid by A and appropriates, and all this one starts having to cover up his tracks, and these are under skimming. Then so basically skimming happens by these employees who deal in cash at sales point, receivables point, at distant places, and all these one, and they do it before they enter in the transaction in the books. So, and it is very difficult to detect because there is not reflected in the books. So now, how do we? There must be some ways of detecting this one. The fraud examiner, as auditor, or as an internal manager, or whatever. So, like there are some things like key analytical procedures, like vertical and horizontal analysis of sales accounts. Okay, reconciling with debtors, obtaining debtors confirmations, dealing with sales, receivables, okay, and the inventory and they are all, this is a cycle, okay. So by tracking this and focusing on that, sometimes you may be able to track this skimming frauds a bit early. And also the other standard procedures of ratio analysis, detailed inventory controls, okay, and a review of journal entries. Because when somebody is doing some mischief, you will always try to cover his tracks by posting some entries or something, and without his knowledge he may be doing something wrong in those entries also. So by carefully analyzing the journal entries that are passed, and besides relating cash sales and debtors and reconciliation and debtors confirmations and all these things, also this checking the journal entries for a particular period also sometimes will help us in bringing out this. And also this can be avoided to some extent by proper delegation of duties. You see, delegation of duties is most important. Everything is one person does, then there will be higher risk for the organization for the person to misappropriate. Okay, and if there are one two levels of checking one another, then unless everybody colludes, that's a different scenario. At least there will be the risk is much less. So briefly, that is what is skimming is. Okay, that's cash asset misappropriation. Under asset misappropriation, cash receipts, skimming. Basically, it's all the receipt of money. When the money is received, it is misappropriated instead of accounting to the organization. And larceny of cash means that is other asset misappropriation under cash receipts. That is also same misappropriation of cash. Let it be cash, checks, or whatever. But after entering also, after entering in the books only, how it is done, it may not be entered in the main books, it may be entered in some registers, or some duplicate invoices may be issued, or some receipt is issued, or something, okay, for the satisfaction of the customer and all that one, or entering in some register or something, so that people watching or seeing things, okay, he's entering something, but actually may not enter the amounts or anything or whatever. And then it is also the intentional taking of money by an employee. Money means cash. Cash includes currency, checks, anything. So this cleverly makes false entries in the registers and the books. Okay, for the misappropriated cash. There he won't make any entries in general. They simply take the money, don't account for it. Afterward, they'll just cover it up, or with some other money they'll cover it up. Here, books are either initially the entries are made, the false entries may be made, so that it looks as though he is making the is accounting for the cash and all that one. Or like cash register and all. Registering the cash register, he will pretend as if he is accounting for the money and all that one. Okay, and it is relatively easy to detect, provided the organization has good internal controls. Unlike skimming, since larceny, some entry or something, or somewhere it is shown as some entry which is true or false is making. By proper scrutiny of the entries made, one can early detect the things. And also, like various types of larceny are like the cash registers, are reversing transactions in the books of account, alteration of cash accounts, and writing personal checks and all these things. That is why it is relatively easy as in larceny to catch hold of any fraud that perpetrated with the employee as compared to skimming, because there is some trial of entries that are coming into the books, okay, which may be false. That's a different thing. So the remedies are basically separation of duties for control over one another, same thing like in skimming also. Then rotation of duties is another thing. That means the same thing, the same person should not be doing continuously over a certain period of time, but an alternative employee should be put in that place, and this employee shifted to another place, or same job may be given another department person may be put in this, yeah, in this department, like that one, so that if there is any mischief done by that previous person, at least the person who is in the rotation has come, he may be able to find it out. And mandatory holidays everywhere we have. In several of my YouTube earlier lessons also, some context I have said mandatory holidays. If somebody doesn't take holidays, means you have to carefully observe him in the first place. Yeah, and so the organization should make it that a person should go to a holiday in a year or whatever for a certain period. Because if that is one of the thing is to lighten the pressure and to make him relax for a while. That's on the positive side. Other side is if that employee had committed any mischief or misappropriation of cash or anything, the person who comes in his place, because there are instances where such frauds have been detected or have come into a light by another employee doing the job of the person who went on leave, because at that time they will try to clear it, but still they may leave some loose ends, or there may be some suspicious transactions which the employee who came in the rotation might notice and bring to the notice of the management, and then it can be investigated. And so it is not only the more than 1 2 levels of checks. There should be rotation of duties, there should be mandatory holidays, and on top of that one, management should have a surprise checks by another independent person, or by an external auditor or internal auditor, or if they have internal audit department, by those people surprise checks. Because a person who has misappropriated, if we take some time to enter the transaction, or he has entered a transaction by mistake, something wrong transaction or something, at surprise checks of cash, of reconciliations, and these things also bring out these cash receipts frauds by larceny, where the transactions have entered into the books of the account. So I do not want to exceed it too much, even though it takes quite a number of lessons to cover extensively. These are all only the starting points where you should start if you want to study for a product examination and then write the exam. So these lessons are only stepping stones where you people who are interested should go study deeper into that thing. Okay, and I'm always available at my personal email address and all. You can find on my LinkedIn or on my website uh, and on my YouTube channel. So with this, we are ending one more part of the lessons, namely the asset misappropriation. Under asset misappropriation, the first is the cash receipts. Under cash receipts, the skimming and larceny. Okay, all the best.